tackling shelter, storage, and soup in today's earnings exchange. We'll bring you the action, the story, and the trade on Toll, Box, and Campbell's. KKM Financial's Jeff Kilburg is our trader today. Kilburg, good to see you again. We appreciate it. Let's kick off with Toll. The shares just hit an all-time high yesterday, and November was its best month since April of 2020. Mortgage rates still high, though. Street will be watching for pricing changes. Wedbush says their typical buyer is still strong. Would you buy the stock at basically all-time highs here and up 74% year to date?
Kelly, there's momentum, so yes, I do want to be a buyer here, and I think it's fascinating to see when you compare it to D.R. Horton, which is about 5 times the size of Toll Brothers. It's a different animal. You see Toll Brothers more in the luxury market. They're doing about almost 10,000 units a year, average price about $1 million. But what we just saw, since we saw rates move lower, we have seen a reprieve in the 30-year mortgage rate. So that mortgage rate now is the lowest level since August. So that may rejuvenate some of the buyers who were on pause as they look for that second home or another home to move into. So I think there is momentum. I think I want to see that continue to move higher. I know we're going to have a sales decline in revenue, but at the end of the day, we're coming off 3 years of COVID when everyone was moving to the suburbs.
Yeah, no, all right. Who would have thought that it would be all-time highs, even with some of the weak activity we were seeing broadly in the market?
In the face of the mortgage rates, exactly. Yeah, it's hard to believe.
It's crazy. All right, what about Box? 13% decline on the year so far. KeyBank is watching cloud AI and their higher-tiered pricing plan that they say could boost profit margins. This one kind of flies under the radar. Would you do anything here?
I want to be a seller here. If you're owning it right here, I think you have a hope and maybe a prayer because it's above its 50-day moving average. But I think with this market cap at $4 billion, it seems almost like a takeover target, Kelly. And at the end of the day, if it has not moved higher, it's dragged and been a laggard all year. If you look at the productivity software segment just back in November, it was up about 15%, where Box was only up about half that at 7.5%. So it seems cheap on a valuation, a forward PE, but there's a reason why it's cheap. So I think it goes lower. So I want to stay away from Box. Unless the fact we do see someone come in and swipe them and absorb them in a takeover purchase.
All right, watching that 50-day line that you see there. Let's move along to Campbell's. Those shares are down 28% this year. Deutsche Bank focused on whether pricing can hold or if the sales mix will skew lower. They're also watching that planned acquisition, as am I, of Sovos Brands, the Rao's sauce maker. It's my favorite. And it's received some FTC scrutiny. Campbell's, and by the way, just to throw this at you as well, Jeff, Nancy Lazar over at Piper Sandler points out soup is one of the few categories where we've seen no disinflation after the 20+% inflation during the pandemic.
Yeah, and look, I'm a fan of Campbell Soup. They're chunky soups. Surprise, surprise, I like chunky soup. But nonetheless, Kelly, I think this has just been a laggard. If you look at a year-to-date, 1 year, 3 year, 5 year. This has been a tough stock to own, but I like it as a trade. I want to be a buyer here. I know all the dividend focus. People get excited about the fact that they're going to pop up to 3.6% in a dividend yield, but this has just been a trade that's been oversold. I think you talk about packaged food segment. That was up in the month of November. Everything was up in the month of November, but Campbell Soup was flat on the month of November. So I think there is an opportunity for this to move higher. It seems like it just overtook its 50-day moving average, so maybe it goes all the way up to $47 on the lack of volume and a lack of interest. So that 200-day moving average has an opportunity to trade, but there has to be a catalyst here, and I'm looking for that, maybe just a short covering or maybe just a back and fill up on the chart. All
right, there we can see the gap you're talking about. It's right around $40. Just in the couple seconds left, Jeff, 10-year has more than reacted as you expected it would, but at 417, do you think it's below 4 is the next move?
Well, Kelly, I think in the same way we talked just 6 weeks ago on your program that it was the yields were too high, over 5%. I think that was an extreme, and now we're seeing the pendulum swing the other way. So I think it settles back in around 4.25% as we go into the end of the year. But every stock asset class out there is welcoming these lower rates.
That is for sure. Jeff Kilburg, we appreciate it. We'll let you go from KKM Financial.